Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through the market update. We have a new feature. I'm going to show you guys this real quick and then go through the earnings trades, give you an update on that. And we'll have Joe go through and do his analysis at the end. So let's get started. So market overview, see everything's in two right now for the indices. They all are positive. We'll go through those charts. Sector overview, kind of, half and half, bearish, bullish, quite a few in four, but, that's not, it's, we talk about, state two being a pullback and four being kind of like a deep pullback. So we'll see if, we'll look at all the resistance levels and things like that and try and give you a good indication where things are going. High wise, so you can see state one's 27.7. So we're pretty much right at, a crossover point. So, we'll take a good look at that. And then just pie wise, last week 45, we had a big drop the previous week. So right around 37, been kind of holding right around there. So let's take a look at the charts here. So like I said, this is ones and eights. So we're up in the 40s at 45, over 45, so like an overbought. So had a steep drop. Now we're pretty much crossed over on Monday and kind of holding, we'll see if it can flip over. Last time, this one kind of an anomaly, but this is like a typical, like where the eights cross the ones, shortly thereafter, there's a bottom, as long as we don't have a big spike back up. So, we're kind of flattening out as far as the eights, not getting a whole lot of transitions. I think part of that is, if we look at sevens, there's not much there that can go 7 to 4, like 4%. So really the other ones we'd be looking at is the fours. So, about 13, not big change from last week, kind of flattening out. And we talk about the twos also. So, last week we were right around 21%. So just kind of dropping a little, kind of flattening out. So not a whole lot of movement as far as the states, but pretty good movement in SPY there. So it's trying to bottom, but we'll have to look at the resistance levels, see if we can get some kind of crossover. But the fours are telling us right now, the four transitions, nothing really happening. So it's not really telling us it's going to be a deeper dive at this point, but we'll have to wait and see. So that's that for there. Highs and lows, we just had that one spike and lows, and since then pretty much nothing on either side. So we'll just kind of wait for the breakout. We had a bunch of this back here, but we were grinding higher. We just want to, this one back here, just one big spike. Not a ton of follow through. Same thing here so far. One spike, not a lot of follow through. So, we'll start seeing green again. That's very bullish. Some spikes up. We don't have a ton in state one, but we have enough. 20, right around 28%. So that's where that is. The moving averages, those are all kind of coming back here. We got the 20s kind of coming back, trying to cross. Same thing with the 50s, and then the 200s. I think that's we had a brief cross, but that was pretty much the bottom of the market there when the bearish 200s crossover. That was pretty much the bottom. So since then it's been up. So you can pretty much say the 200s held And that was the same case with the Russell. You know, it bounced off that 200 bullish bearish. You know, we're not technically oversold, but you know, fairly close. 37.30 is kind of our marker. So, you know, back here, last one was right around the same area, 37.36. Now this one was a little better, tripped at 30, and then that was it. You know, just a couple days turned around. Um, so, you know, it's looking like it's trying to turn around. So this is, we'll watch the key resistance levels. So, you know, SPX here had a nice drop.
So prior to moving over to global market psychology, my boss in the STS group was Jaya Karin Gangaraju, and I led a team of people who were kind of known as database type developers. I mean,
Mhm,
they had skills in SQL Server and Oracle. A lot of their skills were on the back end, you know, queries,
mhm.
designing databases.
You there, Tina? I don't know if she was talking to me or not. Okay, let's look at SPX here. I'm gonna, you know, if you have questions, just unmute and fire away. Okay, so SPX, you know, hit that state target 3 right away and just been climbing ever since. So, you know, I think the key level 5,400. That's the top of the range, bottom of the range, you know, so this all the way up to 58 would be, you know, the previous range we were in. And then, you know, if we're staying below 5,400, then, you know, the bottom's 5,000. But had a nice climb up and, you know, it's currently right above 5,400. So, you know, if we can stay above that, I think it's very bullish overall. Um, but, you know, hit the target and this is looking pretty typical for, you know, we like those 1-2 patterns where it hits target, you know, and then climbs back up. You know, we get the 1-2, 1-2 type of action in the state modeling, and you can see down here, you know, since this 1-1, you know, 2 kind of dipped, hit the 1, ran up, 2 hit the target, starting to run up. So we'll see if that continues the 1-2, 1-2 bullish streak. So I think, you know, the key is going into staying above 5,400. That's the key right now. And, you know, we're pretty much average, right at near the average, you know, hit the better than expected move to the downside. And, you know, now we're back climbing higher. So, you know, out of this, about 2/3 of the time we'll go back into state one. So, you know, it's been bullish. This goes back all the way to '07. So let's look at the chart. Pull it up here. So like I said, 5,400, kind of the key. And not only, so this would be the bottom. You know, if we get below there, or 58's up top up here. So, but the keys, you know, it's even more important because of these ranges. I mean, the 50 and the 20 are pretty much right at 5,400. So getting above those, you know, the 20 has been, you know, the momentum holder. You know, as soon as those things break, you know, kind of fly over, drop pretty good. So we can get above there, and you know, if that shows support, then you know, we could be off higher. But let me pull this out a little. So this is the previous, you know, that's that October huge run. You know, the 20, you know, broke and then turned back. Same thing. You know, this one, I think there's only one day got below the 20, and then over here, obviously it broke and then dipped down. Quite a, you know, significant, you know, very big move here. You know, these 2 days, and then after that, yeah, just bounce back. So the big thing, 5,400, staying above that. That's right. Two of our big moving averages are right there, along with our normal ranges. Uh, So, that 54 held here. So we'd like to get above there and, it shows support. We can keep going. All-time highs are here, 56, 5669. So, it's a ways off, but have to wait and see. So Russell, say two, hasn't done much, is pretty much kind of flat. The 2100 is going to be, the big thing. So we touched it here. That's the top of the range. So, and I think current status, we're above 5,400 on SPX. It looks like we're trying to close above that, and Russell's once again just having problems with 2,100. So let's get back here. So hasn't done the average move, just kind of, I think you can look at the support entry price as support to the downside, and below that would be the 2,000, every 100 points, and Russell's support and resistance. So you got those two kind of key things there. And, we'll see if we can get any upward action on this 10 years and below 4. Let's take a quick look at 10-year. We had that big drop, and then kind of came back up to 4. So that looks like kind of the top of the near-term range here is that 4%, and just kind of grinding down to 3.8. But we're down in the 3.6s here, so kind of mid-range between those two. And that's something to keep an eye on. But lower rates are good for small caps. So, like I said back here, that 200 held. It was pretty much right on 2,000. So, that 100, that's good support. So that's your downside. 2,000 upsides, resistance. So you can see 50 days right on 2,100 pretty much. So getting above that would be constructive for stocks overall. So that's our ranges, 21. Let's draw them out here. There's a 21. So if we get up, that 23 was big, big problem. Just and then lower range here is at 19. But you can also have pretty much every 100 just be like support and resistance. So okay, so that's the kind of key things to watch. As far as Fed, not too much movement. Kind of moving back to one cut. This was last week. Majority was 2 cuts. This is about a month off here, September. So definitely planning at least 1 cut for September, and kind of, I think majority's swinging that way quite a bit. So, a month ago it was 90%, and we had that. We're the Japan and the ISM recessions here, like, and that was all kind of overblown. So, kind of grinding back. November, still, this is 2 cuts. So this one's kind of out of whack, I would say, as far as, um, I mean, I don't know if we're going to see a 75-point cut by November. I would think they would walk these back, but I don't know. But, this one's hasn't changed much. Just maybe a little less cuts, but not a ton, but still quite a few. So by November, they're expecting at least 75, and then December, they're pretty much expecting a whole percent cut. So there's only 3, so they're expecting a 50 somewhere, between these 3. Maybe not here, but one of the other 2. So Last thing, Fed balance sheet, not much running off, week to week. That's 3 billion. So really definitely slowing down, the balance sheet runoff. So, and just kind of keeping an eye on it. But basically right after COVID, we were right at 7 trillion, and this doesn't look like they want to get down to that level. So, or just really slowly. So, okay. I think that's it for market update. Any questions, comments? Feel free to unmute and fire away. No? Okay. All right. So wanted to show you guys, we just put in a new feature. I think it'll be very useful. So it's under options info, the options changed. Let's just put Amazon or something. So you can go through here and look at all the different expirations. So if we pull up like the monthly, you can show however many strikes you want, all 8 or whatever. So on this page also you can click the strike here if you want to look at all the different expirations for the 170 strikes, the calls and the puts, so you can get a side by side of every single expiration. So we've had that before, but I just wanted to show you guys what we just added is the strike analysis. So if you click this side, it's obviously the call analysis, the put analysis, but so what we did, we took all the historical data for all the different Greeks going back to the inception of the strike for that expiration. You can obviously go in and change all the different whatever expirations you want, but you can go back and look day by day. Obviously it's all closing data. Got one bad piece there, but so you can compare, like, this is obviously implied volatility for this strike over time, going back since its inception. So you can look at stock price, which is the close. We haven't finished touching this up, but we push it out there. We'll clean up kind of the little details here, but we get the mid price, which is the blue, the stock price is the black, and then the IV for that strike every day. And you go through all of the different Greeks, delta, gamma, vega, theta. So just thought it was very useful, especially if you're going out there, you're thinking about buying or selling a strike. This would be a good thing to look historically at how that strike's behaved, and all the Greeks involved with it. So you have the call in, the put side, same thing with the puts. So was it, Joe, did you have anything else said on that?
I don't, Josh, just that I think, this can be a hell of a nice reference, especially for, where the price has been in relation to the stock. Hopefully people find it useful. I think it's a very nice educational piece.
Okay, thanks, Joe. Any questions, comments? You guys, play around with this, let us know, obviously.
Yeah, now that reacts also with the time machine as well, kind of thing.
Yeah. Yeah.
I think that's how I had to play around with it, but that looks kind of interesting. As kind of like either pre-analysis or post-analysis, if you got trades working kind of thing. Might be. So that looks pretty interesting, I gotta say. I'll have to play around with it. Thanks.
Yeah, definitely. Yeah, you can go back in time too and use the same thing. So go back to any date you want any strike, any expiration, all the way back to '07. Thanks, Abe.
Yeah, I think the IV line on top of the price line is a pretty good, I kind of like the picture there. I'll just look at that. Thanks. Thanks again.
Yeah. Yeah, this will kill you. It's
Josh,
like, oh, hey, the price is going up, my IV dropped. Like what? Anyway, go ahead, Joe.
This was Josh's idea. He put this together, and I think it could be very beneficial.
Yeah. Thanks, Jim. Okay, so obviously, yeah, just you have to go into the options, option chain to access this right now, and just these links here, the analysis. So you can do any strike and mess around with it. So very cool. Thank you. And let's just kind of run through the earnings real quick. Bullish pre-runner. So this one AMAT is trying to come back. We're almost out of time though. So I think it's up a little today. But this was down pretty good. So it came back quite a bit. You know, in these things, the virtual portfolio, you can pull up this position analysis. Gives you a nice little chart, you know, of day by day price, you know, profit loss. So you can see we got down here to the lower band, came back up quite a bit. So, but you can get, you know, nice little layout for your analysis. And this one will close out tomorrow, 15th. So let's try to come back. But overall, yeah, pretty much break even right now. Bullish pre-runners, 2 hit the profit target. 1 was pretty much a nothing burger. So nothing with the bearish pre-run. Bullish runners. Got a few of these kind of half and half. It's down a little bit, and that was just, I think, that Goldman trade bad, and then you got a couple here. So still got some time on these, but just down a little. It's not, hadn't been a great quarter, just not gonna lie. You know, the vol rise are doing good though. This one, same thing, kind of flat. You know, 3 open trades. Vol rise been kind of the shining star here. Up good. This one's up. Got to the 29th on Alta, but you know, we had 4 close out, 1 loss. Other ones did really well. So I guess the high volatility market is, you know, these are outperforming everything else. So up a good chunk there on 5 trades, 1 loss, and then non-mover. I think we're down. We had 1 maxed, and then 1 came in. So we got F and B. I think it's down near the bottom put right now. We'll see, you know, if it comes back. But had 2 winners, 1 loss at NXVI hurt, and then 2 of the other ones closed out profitable. So usually we have 1 loss, so hopefully not 2. But so hopefully this one will come back. All right. I think that's it for earnings. Any questions, comments? No? All right, Joe, we'll turn over to you.
Okay, Josh. Let me grab the screen. And hello, everybody. Thank you for joining. I'm sorry I couldn't be with you last week. I'd actually like to start by just giving Sadir a shout out. So it was 2 weeks ago, Wednesday, July 31st, you know, that I was last with you. And one of the last things on the call, I don't think, you know, I ever asked this, but, you know, anybody bearish? And Sadir, you know, spoke up and said, yeah, based on seasonality and some of the work I'm doing with, you know, different things on the platform, I'm bearish. And, you know, I had just gone through my bullish rant. And, you know, lo and behold, I mean, I really wasn't able to be too close to the markets, you know, last week, but I want to go through a little bit with you. I am still completely blown away by what happened over the last week and a half. I mean, just floored by it. And my bottom line on this, it's a correction in a bull market, and we get them. But the speed, magnitude, excuse, and you know, I'm not a big excuse guy, but boy, they were. I'll go through the charts and, you know, just got to go through the last week and a half. So on Wednesday, July 31st, Japan raised their interest rate. They had done it once before back in March. Japan's fiscal year runs April 1st to March 31st. And back in March, they went from negative rates to zero rates with their policy rate. And a little bit I've read, you know, there was expectation that they may continue to bump rates up a little bit throughout the course of the year. So on July 31st, they raised their rate 0.25%. And the Japanese market that day closed up 1.5%. Our markets, you know, which had a chance to react to that, you know, were modestly higher. You know, no big deal. But here is, let's see, can you see the bottom of the screen, Josh? There we go, get that thing out of the way. I thought I'd pull up some of the trading economic charts just for a little different perspective before we get on to ours. And, you know, historical perspectives here. So this is the Nikkei Japanese market over the last 10 years. And as I know we've all read, you know, there was a day over the last 2 weeks where the Nikkei was down 12% in a day. I mean, that is just mind-blowing, as are a few of the other charts we'll look at. But there's the Nikkei, and you know, again, that's over the last 10 years. Here is dollar yen. Again, 10-year perspective. You know, something to keep an eye on, I guess. You know, after we got the sell-off, you know, we started hearing about the Japanese carry trade, and I haven't been able to quantify the size of that trade. I just find it shocking that a 0.25% rate increase in Japan could force an unwind to a carry trade, as you know, some awful big spreads in it. But you know, I guess it was August 1st and 2nd. That was a big part of the headlines. You know, the carry trade unwind. That was Wednesday. Thursday morning, you know, we got the ISM numbers, and that they were softer than expected. Generally speaking, this is the manufacturing employment number, and you know, there it is over the last year. It was clearly softer than expectations. Josh and I, you know, we talk every morning. He mentioned this at the time, and you know, here's the 10-year perspective on that number. Okay, so you know, we had the COVID disaster, and you know, it's been in a downtrend, lower than expected for sure. I think they were looking for 49, they got 43. So you know, the stories started. You know, you know how one number, you know, and so many of these numbers are revised frequently, started the recession talk that had, you know, we had a bunch of that months ago, and then I thought had pretty much disappeared for the most part. But man, you know, it started in earnest, and of course, you know, followed by the Friday morning 114K increase in non-farm payroll, and the route was on. And so, you know, essential. And so I went back and looked at our, well, let's see, let me just, you know, the perspective of our markets, both the S&P 500 and the Russell through the trading economic charts. There's the 10-year run. And I'm still a believer that earnings are going to be good. And this is a continuing bear market. I mean, or excuse me, bull market. You know, they're still talking about 14 and 15% earnings growth in the S&P 500 next year. So we'll see. But there is the S&P over the last 10 years, and here's the NASDAQ. So I would argue correction of bull market. These corrections, and well, before I get to them, I mean, this Josh and I, we had a call last Monday, and Josh said to me the VIX is at 55, and I will never forget that, when he told me that. For the VIX, and there's a story out there that I guess a lot of the highs and lows, in VIX happen before the New York hours. And I guess you got a 65 print taken in some of the pre-opening numbers. But I mean, VIX in the 50s out of nowhere. And I just, I don't think someday I'll get over it. Here's our entire VIX chart, going back to 2007. And I can only guess that I don't know who they are and whether it was part of this carry trade, I don't know. But a lot of people got crushed, absolutely annihilated. This had to be some kind of an unbelievable short squeeze from an options perspective. I can't guarantee, but I would guess, that an awful lot of people had on ratio spreads where they were net short options and they got destroyed. Haven't read anything in the paper about, people getting carried out, but I mean, that's all I can think of, with this thing, going as high as it did, as quickly as it did. So, I mean, Dave, I know you keep an eye on the VIX quite a bit, and I think the number in doing some homework, 17.6 is the average level of the VIX over its lifetime, and just that candle is just, I just, it literally takes my breath away, and it kind of gets back, you've heard me say over and over, not much has changed from my perspective in how the markets work, except for the speed. And I mean, it's never been truer than over the last week and a half. So there's VIX. That's the other longer term chart. And, you go back to those spikes. I mean, it rivals, the 08 financial crisis and COVID. I mean, it's the third highest reading ever. In a matter of a couple of days. And this is where, and it only happens so often. I was going to start to talk, and I'll mention briefly, we had a pretty good correction in April, but these are corrections in a bull market. And so, do you want to carry puts against your long positions all the time? Maybe not. Do you want to write covered calls, which you can always adjust? I mean, the speed of these markets, and you can't really obviously time when this speed is going to happen, but boy, oh boy, does it speak to the use of options, from my perspective, either just adding a buffer with a covered call, doing, some kind of, vertical spreads, count, it just speaks to the use of options in a big way to me. But, there it is. There's VIX. So,
Joe?
Yes, Dave.
Yeah, I wanted to chime in there just for a second. It seems like when the VIX spikes and like when you said it comes like out of the blue, it tends to happen, I think, during earnings. I don't know. I remember a couple times back, not in a few years ago, that it was during earnings when we got big surprise spikes in the VIX. And like you said, I think it tends to be a confluence of a lot of things, and it's hard to put your finger on the thing that caused the spike. Here we had, like you said, the yen carry trade. We had, I think, right about the same time, we had the outage of, a lot of people's computers went off because of CrowdStrike pushed out a bad auto update through Windows, and everybody that, Microsoft was like, well, who's to blame there? And there's then some concern about, well, the OS that everybody is using might have some risk in it, that kind of thinking can really add on to another outage or another something that happens on the same time that only lasts, persistent news may only be a day or two, and that's why the spike comes back down. We've pretty much come back to normal now, so the question is where we're going from here. Should we expect another spike or not? I'd be surprised to see another spike now for a little while, because we're moving into the low volatility part of the year, and we're creeping up on an election that's going to pause everybody for the months of probably October and November. So yeah, there's probably a confluence of things that happened back in that spike that are tough to say that they're one-off kind of events that all kind of happen around the same time. So should we be concerned? I'm not so concerned about it, but it just goes to show you what can happen really fast. Like you said, news happens really fast, and that's what affects markets the most, is that the speed of news getting around within the markets. So,
and open positions. I mean, I don't analyze. I've seen, I saw some headline where, there was huge open interest in, I guess, the 52 and 5100 SPX strikes. Well, huge open interest. I mean, for every short you got a long, but I think these squeezes. You can't quantify, the net market positions, but when some of the big players have the wrong position, I think that's what drives this, just historical move. And it's interesting you say the VIX spikes around earnings. I'm going to eventually have to go back and do some homework on that and see if I agree with you on that. I think, the net for me coming out of this is that we've got our trading range. We've got a 550 point range in the SPX. We've got a 3,200 point range in the NASDAQ and a 2,300 point range in the Russell. As you said, we got an election coming up. Typically the elections maybe don't impact so much, but because we have the wild card of a new nominee, I think, the market is probably, that's a bigger question certainly than it was on, whatever day President Biden, decided to move on, I guess early July. So I think it's more of a question. So I think, yeah, the 550 point, SPX range, 3,200 in the NASDAQ and 2,300 in the Russell is where we're going to be for some time at this point, is my take on the markets. I'll run through, here's the good old 10-year. And it kind of interesting to me. You can see we just went into state one 2 days ago. And, we had we've been pulling up TLT a little bit, and we got a pretty good run in that last week of July. And only recently, after run, pullback, did we go into state one. So, this obviously we're always talking about the 10-year. Josh is always talking about it, but something to keep an eye on. Interesting to me that we had the big run. We weren't in, state one, but now are. So, something to keep an eye on. And then I did, of course, want to just offer our perspectives from a retracement standpoint in SPX and NDX. So coming off of the, last fall lows in SPX, and we know NDX has run further and corrected further. That's how it works. But if we go back to the October lows, we still haven't gotten a 3/8 retracement in the SPX, which is our low is 5,116 or something like that. So basically 5,100 is our spike low. Hell, we're more than 300 points, back up into the middle of the range. And, we've got NVIDIA. I don't think at the moment it's still an NVIDIA market, but that is 2 weeks from today. And, it'll probably go a long way towards I still think the election is going to be hanging over the markets, and with the gains we've had this year already, and especially with, the question mark about the new the new candidate, I think that, puts a little bit, maybe not insignificant headwind into the market. We'll see. So that is SPX since last October, November. Here's the same thing with, the NASDAQ. Same low last fall. Look at that spike low last week, 50% retracement, right on the number. And it took, and this is a week and a half ago, it took that last sell-off to get us to the 3/8 retracement. We've been pulling these things up every once in a while. We had basically been getting retracements from the April 19th low, but only now did we get a retracement going back to the last fall's lows. Another thing, from a leadership standpoint, we've talked about NDX XLK, being ahead of the curve. NDX, topped out on July 7th, or excuse me, July 10th. It was, I think it was the CPI number, and it was the next day we got, that historic rotation between the techs and the Russell. And so, basically from that day forward, we had a correction in the NDX, which totaled 17%. And, looking at the length of time in both the April and recent correction, basically you're talking 3 to 4 weeks, are what these corrections are running from a time perspective, in either the NDX or SPX. Basically NASDAQ, 3 to 4 weeks, 14 to 19 days. SPX, depending. I mean, you kind of went sideways in the April correction, then it fell off in 6 days. But that 3 to 4 week period seems to be, well, it's consistent at least in the last couple sell-offs that we've had. There's NDX, again, 50% retracement. Just kind of interesting to have those numbers, in the back of your mind, depending on, how involved you get with the markets. Here's SPX, and again, this is just now from the April lows. It pulled back, pretty significantly versus, there we are, not even a 3/8 retracement, going back to the last fall lows. But coming out of last April, we got more than that. That's why, piggybacking, especially when you have a trend, taking your last couple lows and finding your, a couple different ranges can be a good way to approach things. And then, I think a lot of people trade individual stocks rather than just the indexes, but it can give you, some confidence in stepping up in those individual issues. NDX, again, coming off of the April lows, we basically almost got back to those same April lows. And, NASDAQ, the techs have gone up more and they, pulled back more. And that certainly was the case with the November 22 and October 23 lows as well. So, nothing's really changed there. But there's some perspectives. There's the Russell, Josh does a good job, reviewing this. I just wanted to go back to the COVID, left side of the chart, COVID lows, just to give that perspective, kind of where we are. We were trying to get up and away, and, with the rotation, but then that thing just basically back into the range. Just back into the range. I mean, this is the move that July, 11th, 12th, historic in nature. We went through it. NASDAQ was down 2.5% and the Russell was up 3%. It's happened, one other time, as long as we've been tracking this stuff. So, but that whole thing is just kind of reversed at this point. And then I want to go through some of the individual charts. We're going to go through the Mag 7 and then a couple more at the end. NVIDIA, we just can't forget about it. I mean, maybe it's it's seen its best days, but, 2 weeks from now, I think, let's see how the market reacts. And again, I think this is a pretty good proxy for, the markets in general. We had a top at the 140 range. We get down to about 90, I think, this thing, on that Monday low. August 12th, that opening low. We've talked about a couple of these huge bearish engulfing candles. There's June 20th. We had one back here, in March, which ultimately led into this low on April 19th. These bearish engulfing candles, there've been quite a few of them. Well, we had a hell of a bullish candle, on a week ago Monday, August 5th. And right now, obviously that is the big time low for many stocks and certainly the indexes, and we've rallied a long way. Again, the correction was about 16% in NASDAQ, 10% in SPX over this, 14, 18-day period, and about 13% in the Russell coming off of its big run after the rotation. There's NVIDIA. Stay tuned. 14 days on average. It's 9 days, so one to keep an eye on. But I think it's it's not going to do anything spectacular until we get to the earnings on August 28th, and then it'll be really interesting to see whether they can possibly beat expectations, and then the stock goes down. All about the reaction to what's coming. But that's 2 weeks off. And again, I just want to run through the Mag 7. We've got Microsoft there, and all but one of the Mag 7s are in, bearish states.
Joe, can I stop you for just a second, because you just left NVIDIA for a second there, and I couldn't catch you in time. My bad. And sorry for jumping on your toes, but
no problem. Go for it.
Yeah. It was interesting. The big green candle that you were referencing came on the day that AMD reported results, and which was kind of interesting, I thought, because it had been declining just before then, because some of the big hyperscalers were not reporting great bottom line financials after all of their GPU and AI in quotes investments. Or where's the payback was kind of like what a lot of the those investors were asking. A lot of big money sunk into AI infrastructure, but where's the payoff? Where's the payback? And they weren't quite seeing it through Google and Microsoft. And the big spenders, and that was the reason why NVIDIA stock was kind of like dropping there. But then AMD reported better than ever, and they increased their this is not a suggestion to go out and buy AMD either, because the AMD stock kind of went down after their good report. So
I pulled it up, Dave. There's AMD.
Yeah, so it'll be interesting to see. I expect that. So now what we're seeing right now is the buy the dippers for NVIDIA, and I expect that to kind of take. I put on a couple trades as it was just going up, because I think it's going to go right to the earnings date. I expect them to beat, but I don't know how the future guidance is going to be, and I don't know how that'll be accepted or rejected or loved by the current investors in NVIDIA. But we'll see when that happens. It'll be an interesting day. But that's after NVIDIA turned around. You saw other semis turn around also. Broadcom, a number of them on that same day kind of turned around. So is the AI trade for semiconductors back in vogue or not? I wouldn't say one way or the other myself. But that was an interesting correlation on that date. I was watching if both prices as AMD was reporting their earnings, and it was interesting to watch on a 1 minute time scale that night. Interesting. Anyway.
Yes. It is. I mean, it's part of the great fun of the markets. Trying to connect the dots and figure it out. But it sure looks like the market reacted positively to the AMD earnings. But you had the historic downdraft in the markets, and then you get the same bullish engulfing candle on August 5th in AMD that you got in NVIDIA as well. So, August 5th is going to be a very interesting day, historically speaking, I think, for the markets. It's wow. I mean, all you have to do is look at that VIX candle. I mean, it's crazy. So, but thank you, Dave. And yeah, keep us posted, with your insights on that area, especially because, you spend a lot of time there. And there is, I mean, you can run your retracements back up from the top, in terms of NVIDIA. I think, we'll just, it's interesting to see, what state, NVIDIA is in before we get to the August 28th earnings. So see if it rolls into something else. Microsoft, we've gone through. Here is Apple. I mean, look, I mean, those gaps on that Monday, I mean, they were just, I mean, it's, it was just absolutely, something else. So there's Apple, stay tuned. As I said, the only Tesla, or excuse me, Meta is the one Mag 7 stock that is in a bullish state. Let's see, what is that? Here's Amazon, another gap. Amazon, I guess, had the earnings. So I guess you got two gap downs because, their earnings, I don't think their top line and the revs were bad, but I think it might have been forward guidance here that maybe, hurt this thing a little bit. Here's Meta. So here's the one, and I think, their earnings came out and we had a gap up. And this is what I have heard about, this whole thing about quantifying AI. Well, in listening to some of the talking heads on TV and doing a little bit of reading, it sounded as though Zuckerberg quantified AI to some extent. And, I think the street loved that. You then got the historic sell-off into the fifth. And what I find interesting, and I think, this is really a stock to keep an eye on here. Maybe this is going to be, I'm not going to say the next NVIDIA, but the fact that Zuckerberg, quantified AI into their earnings, saying it had, a material impact. And I think his quote was something like, you can't spend enough money on AI, going into 2025. I think this is a stock to watch. Let me go back and just look at this thing from an all-time high standpoint. So we're close to all-time highs. So keep an eye on that. Tesla, just kind of laying around. I think, stay tuned. It was not a good state one, and I think that's the last of that group. Let's see what else. It's obvious, and Josh pointed this out earlier. Through all the volatility, we had an awful lot of state one to state two transitions. I mean, some super high numbers in the high 100s, maybe in the low 200s. I haven't gone back and checked that versus historical, but I think they were historically high numbers. And, then as Josh always points out, what's next? Is it back to state one? Is it 3 or 4? We've had quite a few transition into 4. So we'll see where that goes. Just a couple more things. I wanted to get back to a little bit of leadership. Okay. So as Josh pointed out, all the sectors, it's a mixed bag. And so I just want to pull up each of the charts, basically the state ones and then XLK also. But I wanted to go back and so we've got, real estate has been in state one for the longest, okay, which, is kind of interesting, especially, the impact of real estate on our economy and, rates up until the last 2 weeks, have remained high. But, this particular sector has been pretty strong straight price-wise. And then you have, I'll pull up all these charts, XLP, XLU, and XLV healthcare, and finish up with XLK just because that has been leadership in the past. Here's, real estate. And a lot of these, I've said this before, it's a lot of, pretty big companies I'm not too familiar with. And it's sort of, it's been in state one for a while. It just, that's 46 days. So, well beyond, interesting that maybe it hasn't moved a little bit more with rates coming down here, but somehow, maybe it knew that, although, this is June, it certainly started rallying, before the rates started to soften. That's, and again, 46 days is well beyond its norm at 37, twice the average move. So, interesting to see if this thing rolls over. XLP, and this is, consumer staples. And, we're seeing all the headlines and all the stories about consumers are fed up with high prices. We've talked about, their margins, for quite a while. We talked about this as a proxy for the market quite a long time ago. I mean, a long, not in the last couple of months, but long before that. We're talking Procter and Gamble. We're talking, that's 14% of this thing. Costco's 14%. Walmart's 11%. Coke's 10%. Then you drop down to Philip Morris and Pepsi at 5%. But, big time names. And, this thing, we haven't quite, gotten any targets yet. But I think, I'd be watching this, more closely than real estate. I don't think the real estate thing is going to probably do this much, do that much. This thing, it's probably a little slow moving, but you got big names. I think one to keep an eye on. Let me just shrink this a little bit. It's slow and steady. So just interesting to see. I mean, I think we're going to be trading range between here and the election. But if you happen to get a big pop in this thing, I think I'm, pop to the upside. I'm going to say I'm wrong, and maybe we're going to, go to higher highs. Here's healthcare. Again, not really fast moving, but a little bit slow and sleepy. Got close to target ones. We still have another 3 weeks in terms of average period of time. We get through these. This one, defense with the utilities. So just pulling it up really because it's one of the longest. 23 days, and again, 40-day average there. So if utilities are leadership, I don't know that that's saying much for our markets. Now, this is the one that I think pretty interesting. This is the industrials, and this just went to state one. We had a state one a couple of weeks ago. Had a couple. Basically it's Josh, it's 1 2 1 2, and we're close to this thing breaking out, and so I would definitely keep an eye on this. You don't have, in terms of the components, it's much more even, where Procter and Gamble and Costco are 14%, Walmart and Coke are 10%, in the XLP. In the XLI, the largest one is under 5%. So you've got GE, you got Caterpillar, you got RTX and Uber, you got Union Pac, Honeywell, Lockheed. They're all between 3 and 5%, great American companies. Let's see whether this thing is going to break out. And if so, maybe the market's going to continue to surprise to the upside. So, oh yeah, XLK, it started the run by a day ahead of NDX back in October, November. So I just wanted to pull this up for perspective. Here it is over that period of time, and hasn't been in state for very much, certainly at all, since the major lows in November of 22. But it is now. We've had a good bounce. Don't need to run retracements. I got to believe this thing is in a trading range, just like I think NASDAQ and S&P are going to be as well. But pretty serious green candle yesterday, and a lot of volatility. So thank you for hanging on and listening to me. Happy to take any comments or questions.
Well, my comment is, I think you hit it right on the head with, we're kind of like, we've retreated, we've kind of reverted to the mean and price and volatility since, the highs and lows there. So I'd be surprised if we go too far either way. I don't think we're going to go past the highs or past the lows before the election. So it's time for those calendar trades that you put on when volatility is low and markets aren't doing much, in my opinion.
Amen. And it reminds me that you mentioned the election again. So I live right outside of Philadelphia. I don't know how many of you, how closely you follow, the whole politics. But the Philadelphia suburbs, I'm on the Jersey side, but it's all part of the mix. We are, from a spending standpoint, I saw something on, I think it was CNN the other night. It showed, the spend in the Philadelphia area. It was so far greater than anywhere else in the country. They popped it up quick. I wasn't sure exactly the time frame, but I mean, both parties were spending $34 million here in, I don't know, maybe it was a 2 or 3 week period. I mean, and the next region was I don't even think it was half of what they're spending here. And the reason that is, the Philly suburbs are supposed to be, this great area of undecided voters that obviously, swings the election. And so when we have visitors to our house, friends who don't live in the Philadelphia region, even up, like my son lives an hour and a half away, they'll visit, and he's more in the New York market than the Philadelphia market. He can't believe all the political ads that we see on TV. Our political ads, and now especially presidential with, the Harris ticket. I mean, it was a lot with Biden. It's maybe twice as much now with Harris. So I would say probably 3 out of 4 ads on television are political presidential ads for us right now. Just my take, and I've always enjoyed politics, so I pay attention. Just my personal opinion on the ads that the Democrats are running now are exceptional, absolutely exceptional. They are somewhat inspirational. They may be complete BS, but I think they are. I think they are going to play very, very well. Republican ads are, as they've been, they seem to be kind of dour, more name calling than anything. Just a off the cuff take on politics. What I'm seeing, we see how the polls have moved, in recent weeks. From a marketing perspective, I think the Democrats are crushing the Republicans in my market, which is the largest market in America from a television standpoint. So just kind of a comment, and I bring that up only because, we can't really quantify how it impacts the markets, but it will. So that's all. Gosh,
Okay.
back to you, an hour and 6 minutes in.
All right, thanks, Joe. All right, well, any other questions, comments before we wrap it up? All right, well, we'll do it again next week. Thank you all.
Thanks, guys.